What's going on, ladies and gentlemen? Can you guys hear me okay? Type a 1 in the chat pane. Having some trouble with my Zoom settings lately. Can't figure out how to get back to kind of a good place. Yeah, so this week I've had every like fourth word it repeats like an echo. Just kidding. All right, ladies and gentlemen, how's everybody doing? Hope you guys are having an amazing week. Looking forward to this weekend. My wife and I will be taking our youngest and moving her to Florida, and literally in about 24 hours, we will be empty nesters. So kind of a new / exciting time of life. We have 2 daughters, and this is our 18-year-old. We're moving her out. Our oldest is in college on campus, doing her 2nd year studying songwriting. So we're going to be empty nesters very soon. And of course, what do you do when day 1 of being empty nester? What do? You go to Disney World, and I'm not joking. We're actually going to Disney World. Oh my gosh, Sammy. Good grief. Yes, maybe. So we're going to Disney World. We're not doing that at Disney World, of course, but we are going to see the new Star Wars thing in, I guess it's the Disney Hollywood Studios. So yeah, super excited about that. Oh my goodness. It is interesting when your kids grow up and then move off. And I know some of you have young ones, babies, can't even dress themselves. So it's really hard to imagine, but we've put on our time. We put in our dues. We paid our dues. And yeah. All right, you guys ready to talk about the markets, or should we talk about life? Talk about the economy, talk about kind of things. The one thing I do know about today is that our jobs report came out, and this is from the Wall Street Journal. I know if I show Fox News or CNN, one side or the other is going to fuss at me. So I think we can all be neutral and just say Wall Street Journal when it comes to economics. The jobs report was a little less than expected by quite a margin. So we were expecting today to have, I think it was 500,000 jobs, and instead we created 194. So kind of falling pretty short on our goal for employment for the US. And I don't know if you guys have ever dug into this, but there's certain markets, certain groups that report and certain ones that don't. So I haven't really studied all the details of that, how that works to know, whether that's an accurate cross section. But regardless, it is what is being reported. 194,000 jobs instead of 500,000. It is what's being reported, and it is what it is. So which I was expect a little bit of selling today, not super high volume, just slightly high volume, not anything even noticeable on SPY today. The thing I'm thinking about, which you guys have all probably seen as of yesterday, is this little gap still needs to be filled. I was thinking it might fill today, but apparently today's not the day. Maybe on Monday. We'll see what happens on SPY. But for the most part, I do expect some more choppiness to occur. There's a lot of things kind of off track in the economy, and I'm not just talking about I'm not talking about just Washington and the politicians making decisions on our behalf. So all that to say that we're kind of chopping around. We've kind of held the line for the most part on the 100 simple moving average. So I would expect that to occur, of course, filling this gap a little bit. Do I think we're going to hit the 200 simple moving average? Probably not. I think we're still, buy the dip is still in effect. And we do, of course, need to fill this gap just a smidge. Whether that happens, Monday, do we sell off and then get bought up and then continue higher, or do we gap down to here and then run up? We will know more next week. Absolutely. All right, the Q is pretty much the same thing. Holding this area, same gap to fill. The DIA, same thing pretty much. And then IWM chopping around, going sideways, which this thing does not know what it wants to do since February. It's up, down, up, down. And of course, there's a couple spots where if you are astute and you can get in and place some orders, you can absolutely make some money on this sideways action, getting in and out really quick, taking some profits quickly. Let me take a look. Okay, yep. All right, first up today is Ethereum, ETHUSD. Type an E into the chat pane if you have some Ethereum in your crypto accounts. I will also type an E. I have some Ethereum. Type a 7 if you actually mine Ethereum. Probably not anybody in this group mines Ethereum. Shout out to the one and only legendary Muso, who does mine crypto. You know, that's a whole specialty in and of itself, mining, setting up mines for crypto and electricity and cooling and all the things that make it work. So today, if we were to look at Ethereum, I think it still looks pretty strong. If you look at it on a weekly, obviously had some weakness come in early summer, very much starting to rebound, continue higher. If you were to look at it on a, let's do it this way, on a daily chart, you'll see that it does very much respect this 200 simple moving average and has for quite some time. So if you like to play quick in and out plays, obviously yesterday was a little bit of a indecision candle. Today was also an indecision candle. My advice, my plan, well, I already have quite a bit of Ethereum, but my plan, if you're not in already, what I would recommend is buying off of this level, this 100 something moving average, waiting for a pullback. What you don't want to do is rush in. You guys, obviously somebody right there bought right at all-time highs. Don't be that person, right? Now imagine, guys, let's just go back in time for a minute. Let's walk this just for a minute. Imagine being the person who's like, oh my gosh, I am missing out. I need to buy, and bought at all-time highs, right? And your boy Matt DeLong over here recommending, hey, why don't you just wait? And you're probably thinking, but I don't want to wait. I want to get in now. I want to make some money now. Well, you know, time has a way of rewarding those who are patient. Obviously, up here, I'm sorry, down here would have been a lot more preferable, easier, palatable time to get in than up here. Obviously, being significantly lower. Let's see if we were to measure, you know, a quick 48% sell off. Be patient, do your thing, have some open orders waiting. Some people call those puke orders. Have some orders waiting to get filled. And this has been my plan since early summer, is to get in and buy in for levels. Now, if you're not in already, let's actually play that out. Obviously, you can't necessarily collar quite the same with crypto that you can with stocks, of course. Otherwise, that'd be totally awesome if you could. So at this point, obviously, if you're not in, let's take a look. Let me fast forward to the end and let's take a look at where we are today. Yep, my advice would still be the same. Buying in this area on pullbacks. And you guys will see, obviously, if you did that here, makes a lot of sense. Get some tippy toe in. Do not be buying at all-time highs or near all-time highs or retest of all-time highs. You want to wait for some kind of a move lower and then a continuation higher. You want to be smart. You want the order, the price action to come to you. The only way to do that is have an open limit order waiting to get filled. And if you just want to put, you know, $5,000 in total, define where you want to do that. Right? Do you want to do that here at the 2,900 level, a little more at the let's say 2,780 level, a little more here at 2,700. Absolutely worthwhile. That's what I would recommend. And as you guys, as I demonstrated, case in point here, and also here, obviously it pays to be patient. Obviously pays to be patient. So that's what I recommend. Be patient, have some open orders. You don't always have to just be in something at all times. There's nothing wrong with being in cash sometimes. I have some coaching students who are like, Matt, I need to be at something. And my advice is don't be in a hurry to lose your money. Like wait for price action to come to you. So imagine being in a canoe on a lake, everything's peaceful, placid, and you got your orders open, you have your fishing rods deployed, and you're just waiting. Nothing wrong with that. Nothing wrong at all with that. So that's my recommendation. Next, TDOC. This is a sore spot for me. I still have some shares. I do have puts on right now. This is one of my hodlers for the year. I do have, I'm already at my max loss, I have some protection on. If you're not in this right now, I would recommend you tippy toe in and otherwise stay away. This is kind of we'll just say a broken chart. It is a current dumpster fire for Matt DeLong and his, I mean, I have plenty of winning positions, but this is one of the suckers, one of the losers. You guys see my plan, been very transparent about it. My average, I think, is around 210. So, which makes sense. If you go back in time and you're like, okay, let's go ahead and get into TDOC, boom, fully in. That makes sense. Fast forward a few months, obviously, could have bought lower. Still a solid company. I like it long term. That's why it's in my retirement account. But I am not expecting this to get back up to all-time highs anytime soon, probably a good 6 months to a year at a minimum. So if you are expecting this thing to bounce, obviously it broke support here at 131, 132 level. If you're expecting what I'm thinking is going to happen is going to roll over a little bit more, retest this level, and then chop around for maybe a few months. So we are in October. October is a kind of a spooky month for the stock market. A lot of spooky, crazy selling and things happen. Obviously, jobs reports and other things happen at different times throughout the year. But October is historically kind of choppy, kind of volatile. So if you're not in this already, tippy toe, be very cautious, be careful, but don't expect this to pay your bills and cash flow unless you're if you're quick and you're short and you can get in and out quickly, be my guest. And heck, you could probably borrow my shares, all the shares I have to sell and be short on. Yeah. Hector is saying that TDOC is dead to him. So you're saying there's no chance. I think the real takeaway here, team, is if you think about looking to the left on any chart to help you decide what could happen or what will happen. Obviously, here in the end of about a year ago, I guess you would say 11 months ago, TDOC broke the 200, but it recovered pretty quickly, right? So it broke the 200, recovered really quickly. Here, back in March, so we are 7 months in, it broke the 200 simple moving average, which, as you guys know, long-term support moving average, and just never quite recovered. Still hasn't. So obviously, if there's some huge company who wants to buy them, it's kind of acquire TDOC. This would be when the stock is way off their highs. It would be a time to do that. No one has stepped forward and done that. So that tells me that they're it's kind of slim pickings. It's going to be a TDOC winner, we'll say it that way. I like the company long term. If we were to take a peek at TDOC, let's see, where is TDOC? We take a look at a long term. I like some of these numbers very much. 108% sales growth off of 1.63 billion, and then it's trading at a 12.8 multiple of revenue. So revenue times 12.87 gives you this number. I think it's a solid company. Just the chart, you have no idea. Yeah. AMAT. This is what, ladies and gentlemen, this is what a bullish trend looks like. If you want to get into something, this would be a solid option. Now, does anyone notice what's happening here in the past 5 days? Past 5 days, what's happened? Well, we went a little bit lower on below our 200 simple moving average. We closed above, which means we held, we tested, we tried to go lower, and we held above, held above, held above. So that 200 simple moving average, again, long term, is think of it like the last exit before a long, slow grind lower, right? It's the last off ramp. And if it breaks that, unless it can recover, usually in a few days or weeks, it's going to be headed for lower. But all of these stocks have some overall selling coming into it. Ideally, if you like this, buy right here off the 200 simple moving average with, in this case, you could have a stop down here. Let me do that a little differently. One sec. It is also very much in a channel. So not making new highs, not really putting in new lows. Let's take a look. So if you were to buy this off of the 200 simple moving average, I would recommend a stop something like this. This is not on my list, but if whoever asked for this, let's see, we're gonna do a limit buy, something like that. So it kind of implies a little bit lower with a stop here. Now the question is, ladies and gentlemen, why did I put my stop right there? Well, this held right here before, and I'm giving a little bit of wiggle room, just a little bit of not punch me in the face type wiggle room, so that we do have a little bit of room in case it goes lower, right, on a little bit of a sell-off. Boom, boom. That's what I would recommend on AMAT. And yeah, so also if you were to think about this in terms of risk reward and think, okay, what are the odds of it getting, I'm just eyeballing this, maybe 2R, something like this is very possible. I'm not actually doing the exact precise target 1 and 2. One of the tricks I've learned is the spacing that's in between here, if you make it about the same for each of these, it's roughly 2R, not to the penny, but for eyeballing purposes, and obviously getting back up here before it hits this resistance up here at the 144, 145 level, absolutely makes sense. I get it. Boom. Also, if you had done that before, you'd be up just a little bit when it touched down right here. And if you're not sure how to do that, you can certainly open up an order, wait for it to get filled, like a limit order. If you're playing this intraday, I don't know if you guys have seen how people do this intraday, but intraday, imagine that the price action at some point was down here on this day, right? Down here at the 123.50 level. And then the moving average is here. One thing that I've seen people do, this is called a bullish slingshot, is once you're down below, and obviously the candle hadn't closed, but intraday, once you're down below a 200 simple moving average, you can then set up a stop limit order with a stop below the low. It's kind of an intraday swing trade. And when I say intraday swing trade, I mean you set it up in the middle of the day and you hold it for a few days. Obviously, if you were to do that, you could have chopped and grabbed 2R. I don't know if that makes sense or not. Type a 2 into the chat pane if that makes sense. Again, yeah, wait for to go below the 200, set up an order at the 200, and then your stop below the low of the day. And obviously, it assumes the low of the day is in. Obviously, it would the stock price would have to go higher for the low of the day to actually be the low of the day, right? Does that make sense? So, and the one thing you have to be careful of that when you're doing that is you don't want the price action to be pennies below when you set that up. You want it to be, a couple percent below. In this case, the stock on the day was down about 3%. It closed about 3%, but let's see, let's measure this guy. Closed here, and at some point during the day, it was down 4.7, 4.8%. Right. So, yep, and then it ended up closing down 3. So it was about 1.7% below 1.7, 1.8% below that 200 moving average. Put a order in there, stop there, and you're waiting for this turnaround. Again, intraday swing trade, kind of unusual. Maybe you've never heard that term before. You're looking at intraday price action to determine when to get into swing trades. And that, ladies and gentlemen, is called a bullish slingshot. Yep. All right, next up is ON Semiconductor. ON Semiconductor. The thing I think this has some more selling to go. You guys see here, does anyone know what kind of candle that is from yesterday? Let me try if I can zoom in a little bit. What kind of candle is that? Type it in the chat pane. Somebody got to know. Does that look like a falling star? Shooting star? Oh. Gravestone doji. Not perfect. Most gravestones look like this. Actually, I think. No, I'm trying to think. Well, I saw that on a chart today. Yeah, so do you guys know what the upper shadow represents? Oops, the upper shadow represents. Sorry. The upper shadow represents selling pressure, lots of selling. So what does that mean? I think I would say just based on this candle right here, I would think a bottom is in right now for now. This is like a, obviously it retested that level. I don't know, a couple weeks after this happened, has not yet filled the gap. Someone asked in chat today, is the gap filled based on the wicks or the body? And I go with the wicks. That's what I use. I don't know what you guys use, but that's what I think about is the wicks, because obviously the price action move there during the day doesn't really matter how it closed, but a little bit of gap fill action to occur. So if this is the support level based on the low of this, because of this crazy buying volume, where would you guys set up a trade? Well, I would wait for it to get back to that level, right? So if you had, let's say that this hadn't happened yet and you were somewhere in here, somewhere in this time frame, and you saw that this hadn't yet put in a low, buying right here at the 4230s with a stop probably down here at 40, let's say 40 even. Does that make sense to you guys? Would you guys do that? 40, boom, 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 with a limit by, boom, something like that, right? Does that make sense? Would you guys do that? Well, I think that would be a solid play. Again, you'd have to measure your risk reward to get back up to 2R would be up here, which would have to make kind of a new high, which probably may or may not do that. Obviously, when you make new highs, you have some new headwinds to contend with. So probably not the best risk reward back. This is back a month ago, 6 weeks ago. So if you did that, and then you're like, oh shoot, it broke the resistance, you got to give it some time. Did it? Yeah, it looked like in a week later, it kind of regained that level. So I would, obviously, if you set that trade up, you'd be profitable. But the question is, can you get a second chance at that kind of trade? Obviously, you would have made 1.5R, 1.6R, boom, 2R, right? So again, once it hits kind of new highs, has some resistance, some new headwinds, and then boom. So what I would do is go ahead and set up, if you want a second chance at this, that's what I would set up. Give it another gander. Again, this being the support level as defined by this volume candle here. So this would be, let's see, 1R. This would be 2R. Anyone have any questions about that? I like to, we get a lot of questions about why do we do what we do? And I try to explain that. I realize it means we're going slow. We're not flying through a list of 1,700 stocks like Jeremy does sometimes. But am I concerned the gap will fill? It could fill. Yep, it could fill. The question is, how often do do gaps fill? Like this didn't quite fill over here. This thing just gapped all over the place. Geez, it did eventually fill as we got higher. It could fill. The thing that I'm looking at, Justin, it is these two levels. Maybe if you move it even a little bit lower, but these two long-term, some moving averages, I think are going to act like breaks before it gets down. It would have to go a little bit below, like maybe 60 cents below. Yep, and that is ON semiconductor. Next up is Peloton, my favorite workout equipment. Ladies and gentlemen, chopping around, doing its thing. You guys can see it kind of put in a little bit of a bottom here. It seems to hold up well. And if I was to look at, let's see, trying to see what the biggest buying volume was in recent times, would be this candle right here. If you look in between these twin towers, there's a little bitty buying candle, which kind of suggests that that would be a little bit of a support level. Obviously, if it breaks that and closes below, goes below for any period of time. So it looks like we're close to a support level. I would do something like this, probably with maybe a $10 wide strike. A lot of these stocks are kind of beaten up quite a bit. So I would do something like a limit buy based on this being support, waiting to get back down there. Obviously, if you had an open order here waiting, you would have missed it by a few pennies. So 80.18, the low of this was 81.04, 81.50, 81.33. So would have missed it by a little bit. But this type of order kind of implies and suggests maybe we retest this low and then continue higher. Now, obviously, if we were to think about our risk reward, 1R would be here and 2R would be there, right? For the most part, right? And if you wanted to make these even dollar numbers, you would just do 18, boom, boom. And you would set up 80, let's see, 80, 90, 18. 90.18 for a whopping 1R. 1R, where are you? And then 118 2R. Boom, boom, something like that. And again, I like to set 2R targets that doesn't have to break new highs. Now, yes, it could. This is kind of a relative high. Obviously, hit some resistance here. Never, ever, even when it wicked up just a little bit, it did not hold. So there's some selling pressure. There's orders up here waiting to sell. And a lot of times what happens is people who may have bought up here, there's orders waiting and they're like, oh, I want to get back to break even. And so that puts in a lot of these maybe retail selling orders waiting, putting this pressure on that, hey, when you get back up here, it's gonna roll over again. So that's kind of how that works. Let's see. Peloton 100 SMA break failed crash. Yeah, absolutely did. And so right here, it broke through, kind of bounced off the 200 and then rolled over. A lot of these stocks that are below a 200 moving average is kind of a broken chart. Our moving averages are reversed. This would be a little bit higher risk type trade because our moving averages aren't going in the right direction. Obviously, something like this, our moving averages are going in the right direction, right? Not only that is we got strong support here. We're buying off a moving average. We're buying off of a long-term 200 moving average, right? Down here, very different, kind of pushing new lows for quite some time. Hasn't really got up out of this chop since hasn't really made a new high or closed since June. So a little bit higher risk, but I could see it kind of getting back up to 2R. The thing that you have to just be mindful of here is it could be putting in this kind of like a descending wedge a bit. So if you were to think of it like, right, you guys see that? A little bit of a descending wedge, and most wedges break to the flat part. So the flat part being kind of down here. So we'll see if that holds. If it does, great. If it doesn't, play accordingly. Put in your stop. Be smart about it, right? Okay, that is Peloton. Next up is FedEx. FedEx looks like Pinterest, doesn't it? Oh, it fell off the ground. But FedEx obviously has not filled its gap from earnings. Tons and tons of selling came in. What was this, 2 weeks ago, right here? And so I would think that it would kind of imply that there's kind of a little bit of a resistance here. So it did hold down here. So I would think, I mean, this is not something I would play. It is showing quite a bit of weakness. Obviously, as we go into the holidays, with shipping packages and COVID and shopping and all the things, I would a lot of times these companies, people assume because the holidays are coming, there's going to have lots of business. Therefore, you can even look, well, last year was kind of exceptional, but you know, as you go into the holidays, it does have this little bitty, this push higher. The thing that I try to steer people away from is just because FedEx and shipping companies will be busy does not mean the stock will go higher, because the question you have to ask yourself is what is expected? What is expected? If FedEx, think of it like this, if toy stores are supposed to be busy during the holidays and they're busy during the holidays, doesn't that mean they did what was expected and kind of what was anticipated and what was already built into the assumptions for the stock price itself, right? So keep that in mind. Sammy's saying higher gas and labor prices will kill them. I don't know if I would say kill them. It'll certainly make things tough. FedEx to me, it's an interesting business. Got a killer entrepreneur story. Kind of a slow growing company, right? It's not super, they're not banging 40 to 100% sales quarter. I mean, it's obviously 86 billion is a pretty, it's some zeros on the end, right? Significant number. And the PS, you actually can't use PS when you have low sales. It doesn't really apply. It's not apples to apples. So reporting was a couple months ago. So something to think about. This is one I would not touch personally. I would not touch this one. I do think you have some resistance here, and then you also have to fill this gap. So I don't see that happening personally. So I would wait on this. That would be my my guidance. You want to, if you have to tippy toe in your long-term account, you want to buy some down here, you like the company long-term, be my guess. Wix, also another tech chart beaten up like crazy. Let's take a look at Wix here. One sec. Alrighty, Wix sales 34%, not bad. 34% off of 101.6 billion. This is a reasonable PS ratio, ladies and gentlemen. Reasonable. Now that we're talking about long term, we're talking about buying stocks for kind of for long-term retirement accounts. The chart itself is broken. Obviously, we gap down. A lot of these charts have done this. Still not yet filled the gap, making new lows. So this is a kind of a higher risk. This is what Ross would, well, not Ross, but this is something that you call a YOLO, a Hail Mary. Yeah, maybe you can make some money off the bottom, but you don't want to cut your hands as you're buying a falling knife, right? So I would I like the company long-term. If you want to put a few shares in your retirement account, nothing wrong with that. But this is not, for me, this is not a swing trade that I would try to generate cash flow on, that I think would get back up here. I mean, it's gonna be a while, ladies and gentlemen, before it gets back up to its highs. 360. I mean, what are we talking about? We're talking about where it is now up to 3. You're talking about almost doubling where it has to go just to get back up to where it was back in early March, right? Ross, what you mean? It's a verb now. A YOLO. Sorry, when I was thinking YOLO, I thought your name, Ross. YOLO. You only live once, but that's not your trade. So yeah. All right, let's continue on. Okay, CrowdStrike. Ladies and gentlemen, this looks strong. Do you guys think this is a solid company? I mean, look at our moving averages. A lot of tech companies have been beat up. This one's held its own. It's definitely very much held its own. Obviously, it holds by the dip would very much be in effect here on CrowdStrike. Let's take a look behind the scenes on CrowdStrike. Sales about 70% off of 1.14 billion. Yes, please. Now imagine having a small business and doing 70% of quarter over quarter. So imagine you're in the, let's just say this got reported in August. So imagine you're in the second quarter and your small business you did 70% of more sales than you did the second quarter of the previous year. That's pretty impressive. Pretty impressive. The thing I don't like is this number. It's still very, very high. 40. So trading at a 48 multiple of sales. Right, take this times that roughly gives you this. So your sales times the multiple will give you your market cap. Imagine breaking even after 48 years. If you bought the whole company, well, just based on the revenue, not even the profits. The profits are at a negative amount. That's kind of how I was thinking of it. So I like this long term. The problem is it doesn't look very attractive pricing wise long term. If we were to look at it on technicals, it looks solid. So this is one that swing trades would make sense. The long term valuation, a bit of a stretch, a bit rich for my blood. So again, just keep in mind if we do get questions often about what do I put in a retirement account, what do I swing trade? I like to buy companies that are solid companies that are weak for the long term, because it'll take some time for it to turn around. And I'm not retiring tomorrow, so I can hang out for a decade. If I need to 10x my money, I'm fine with that, right? The swing trade, and then I don't have to spend tons of time looking at it and placing tons of trades, spending lots of money. The thing I have noticed here is on this candle right here, if we're talking about a technical perspective, kind of implies that a base is in here, right? It broke it and closed lower, retested that and kind of rolled over. You guys see that? The other thing that I'm seeing here is the selling from here kind of implies that there's a top in for now, based on this candle, which is represented by this volume. Yeah. So kind of a top in, kind of a bottom in, and then I'm sorry, support, and then it kind of broke and broke that, rolled over, retested, and kind of rolled over. So if you like this company, I would wait for a little bit lower. If you like pyramiding, which is one of my favorite things to do in these kind of choppiness markets, set up some levels where you're okay with owning shares longer term. Maybe if you're interested in buying as the price action goes lower, set up some levels. I'm not sure if it quite gets there. You'll see that it doesn't ever hit the 200-some moving average there. Let's see, COVID is probably the only time it did, yeah. And then our moving average is switched. So that's interesting. It hasn't been out for, I guess, just a little over 2 years now, IPO wise. But boy, they had a run from, let's see, it opened at 63.50. Still still rocking higher. So if you were to take a look on a longer term weekly, I don't know, ladies and gentlemen, that's what a bullish trend looks like to me. Very much bullish trend. Put in some indecision today on the close of today's weekly candle. Be bullish, buy the dip. On CrowdStrike. All right, Disney, where I will be going tomorrow. Which have any of you guys tried to go to Disney recently? It's kind of a weird thing because they want you to buy a ticket and make a reservation. It's like, what? Gotta make a reservation to go. It's a lot of work. Yep. Kind of channeling, going sideways, moving averages crossed. This is a I know a lot of people like Disney. It's not a fast growing company. Has had, so if you were to look at, and what I mean by that is if you were to look at the past 5-year average, it's grown 4.5%. Woohoo! Nothing to get super excited about. This recent quarter has done good, but it's kind of a slow moving company that's had a good quarter. You guys see the difference? Like a good company's had a bad quarter, a bad company's had a good quarter. Not that Disney is a bad company. We're not going to talk about politics or anything like that, but I'm just saying from investment point of view, what in the world is happening with my ads? Elton John saying hello to the real life traders. Oh my goodness. Oh, stop. Okay, so again, average past 5 years, 4.5%. Annual sales growth past 5 years. Had a good quarter. And Disney owns tons of brands, which is kind of shocking. How many brands they own? This is one I would, not on my list. Obviously, there you can buy off these support levels if you are interested. Next up is Upwork. So I actually put a collar on this. I'm not sure why it does not show. Let me see if I can drag this over here. So Upwork, I shared this. I shared this quite I don't know, maybe three weeks ago. Kind of what my plan was on Upwork, something like this. At this point, I'm not actually in the shares, and I'm like, hey, I'm basing it off these levels. I like it. Let's put in some orders, some orders, open orders. Let's good till cancel. Boom, got in. Boom, boom, boom. Here we are. So I have more than 100 shares. I have a couple 300 shares plus of this. So I like this. And here's what I did today, team, is I went ahead and set up a covered call and a protected put, also known as a collar. Got a collar in. So up, I think it's, even though I'm only in 30%, I'm up 3 or 4R, and I came out of pocket maybe $400. Something I have to go back and double check, but said, and I don't know why. Does anyone know why TradingView doesn't save some of your lines sometimes? It's kind of irritating. But I did take a screenshot of it, so I can go back and reference that. But went ahead and put in a collar, locking in my gains right now with some upside still. So we roll over and I get more shares down here. Ooh, not quite that low. Not quite that low. Down here, I'm fine with getting some more shares. I have some open orders waiting for that, but it's very unusual to have like 30% of your shares and have more than 100, and then being able to collar and protect those gains. So I don't know. I feel like I got a gift fell in my lap today, and I went ahead and took it. Yeah. Thomas, I actually do. I have an ad blocker on, but half the stuff on the RLT website just doesn't show up for me, so I turned it off. Yeah, it's kind of weird. It's these parts of RLT, like our Trustpilot embedded reviews or ads. I think that's what it's looking for, is like embedded items to block. Anyways, Upwork still, you guys can see, putting in a pretty solid set of, it's not a double bottom, but it's a set of lower highs here. Try it again. Oh, one more time. There we go. Yeah, Mr. Squiggles for the win. Again, our moving averages still going in the right direction, still parallel. A little bit of choppiness still going on. Just a little bit. But I'm in. If you're not in, here's my levels. I recommend you get in. And the most important thing when you are pyramiding, when you're getting into a trade where you're buying more and more and more, most important thing is this guy right here, which is your plan to pull a parachute, pull the emergency brakes, pull the parachute, pull the ripcord. You know what to what you need to do in case the trade moves against you sharply once you have all your shares. Now, for me, this it's not possible to be a losing trade for me. Really isn't. It's not possible. It's already going to be a winning trade, up 3R, and I used less than half of an R to set up a the collar to lock it in. So, yep. If the price action goes lower, well, actually, let's look at it on here. If the price action goes lower, I'm locked in at 55. If it goes higher, I get another 250 per share. If it closes in between, I'm fine with that as well. Right. So, all right, let's see. Justin, you're still cheap on your protection. You bought the 5250 today for the collar. Yeah, I get it. I understand. So here's what I actually looked at that, Justin. Here's what I decided to do. 5250 would be down here, correct? So at the time, it was up here. The price action intraday was around 54, and I thought, hey, 55 is closer than 5250 at that time when it was, when I looked at it. I don't even remember what time that was, but before the market closed. Let's see, intraday, what does that look like? Okay, yep. So that's kind of what I thought is, hey, we're closer to 55 than 5250. And then of course we closed higher. So that's it. There's nothing wrong. The way I see it is, if I have, I mean, tell me if you guys think the same way I have. If I have a 3R gain, am I okay with spending half of an R to lock in that, plus give myself some upside? I would take that every single time. I would take, if I'm up 3R, would I spend half an R on insurance? And again, I'm selling a covered call to help fund, right? So I'm selling this covered call here to help fund the purchase of this guy. So I don't know, I would do that. I think I think you're up, just imagine you're up 3R and you don't want to spend maybe a fifth of an R on insurance. I don't know. I like to, I mean, it's pretty interesting though, because one of two things can happen. Obviously, if it goes from here down to this level where you set it up, Justin, you're giving back, depending on how many shares you have, you're giving back 250 per share. So at least, you know, I've got 100 shares. That's some coinage. Not a ton, but that's what I do. That's how I think about it. Don't be cheap, Justin. Sorry. Oh man. So normally, yes, you are making progress. You normally would want to credit, which would be even worse, but you're making progress. Yep. Sammy said he sold the 65. What kind of Justin sold the 60? What kind of premium do you guys get on that? I like to sell maybe a little bit, like 40 delta, a little bit out of the money, and then buy at the money, protective put. So let's see, got 263. $263 for what strike was that? 6 for the 60. Okay, you got 263 per. Okay, yeah, I get it. I don't know. This is my thing. I would use a small piece of my winnings to guarantee lock-in gains, because you really never know what's going to happen. I mean, team, this has been a crazy choppy market, really since February, up down. I mean, here's the market. It looks something like this, and like, good luck in trying to be profitable unless you got some discipline, some strategies under your belt. Of course, everyone at RLT is just like that, right? All right, next up is PLTR. So it is making a series, a little bit of, Jesus, Mr. Squiggles, come on now. I cannot draw a straight line. I might as well just do it like everyone else does and draw a trend line. But it is absolutely kind of putting in a series of lower highs here. So nothing wrong with buying a little bit over here, PLTR, buying a little bit. Obviously, that would have been a sick way to set up a pyramid if you did. Otherwise, buy off support, which is basically right now, right where it is. Put in some orders. I would do something like this. That's lit. I would probably pass on this one actually, but I mean that's what, $3 of risk for on a $20 stock. If you're to zoom in, let's take a look. Also, I need to hurry up and I'm going to show you guys a few things. One sec. All right. Let's take, so anyways, if that's what you want to do, so to get 1R would be about right here. To get 2R, have to kind of round and kind of hit that level. It could happen. 20, it would be 26.50, then in 29.50. So yeah, it's about right. Yep, PLTR. Next up is Trade Desk rather. And what's funny, I actually had, you guys remember it did this split. Someone actually messaged me and they're like, hey Matt, that when the price action down here, hey Matt, we want to put some dollars into this. What do you recommend? I'm like, yes, do it. And I saw them a few weeks ago and I'm like, did you do it? Nope, I didn't do it. So again, ladies and gentlemen, the moral of the story is take action on stuff that you think would work. Obviously, the split itself doesn't generate any real value, but for some reason, it does make a little bit of a pop higher when, especially when you get this, let's see, when you get this massive selling coming in, putting in a little bit of a top, and then you break above that, close above it, and then continue higher, right? So in this case, I don't really, let's go back. In this case, your moving averages are crossed. You're kind of below this 200 moving average, kind of a little bit beat up in advertising. I think it's going to be interesting next, we'll say rest of October. Definitely an interesting rest of October. If you were to zoom way in, you'll see that we had a little bit of indecision candle today, hit its head on this 100 some moving average. Question is, will it roll over or does it break through and then retest and go higher? Volume has been pretty low on this for quite some time. But if you look at this guy right here, this candle does put in a little bit of a base. A little bit of support right here at this level. So yeah, I would say if you really wanted to have an open order here around $66 with, let's see. It's not an obvious place to put a stop, but maybe down here at 59. Something like this. Let's try this again. Boom. Boom. Limit by 66. I'll mark it 59. Something like that. So thinking about that, we got $7 of risk. If we were to, let's see, 73 would be 1R, and then 80 would be 2R. So yeah, I can see that happening. Again, it is putting in a little bit of a series of, now this is a bull flag coming in, right? Flag pull. You're going to continue higher. That would be my my analysis on TTD. All right, next up is Fiverr. Fiverr hanging out, just like most tech stocks, beat up a bit, has not quite fully, which by the way, has not fully closed the gap here. Which by the way, if nothing like breaking through both long-term moving averages, closing below and then staying below, right? So, I mean, if you were to look at this long-term, it doesn't look bad when you zoom out to a weekly chart, putting in a little bit of indecision candle today as we close out today's weekly candle. Didn't quite fill the gap yet on Fiverr. I like the company. Actually, let's take a look at the company. I haven't looked at this one in a while. Sorry. Take a look, see. So we have 59% sales growth, trading at a 25 multiple. Okay, not terrible, not terrible. Again, we have some support drawn here. I think some of these companies are going to chop around a little bit more for the month. So here's what I do, team. When things are super choppy, I go ahead and try to lock in gains early. And sometimes that means for automation, that means go ahead and shut down profitable trades. As you guys know, with the overall markets being up one day, down the next, up the next, down the next, you have to take those early wins. You can't necessarily always wait for a 2R because it may not happen. I've seen plenty of trades get to 1.5R and never make it to 2R and kind of roll over and go back to break even or slightly, slightly worse. But you just have to get super aggressive in locking in gains in choppy markets like this. And that's what I'm doing. That's my plan. Bitcoin looks pretty solid. Our moving averages obviously crisscrossed and about to, looks like pretty soon they're going to cross again. I like Bitcoin long term. I have some Bitcoin. I have some Ethereum. I think, just like a pyramid strategy, if it does hold this 100 well, last time it held well. So if you wanted to tippy toe in, set up some orders on this, you had, let's see, if you're looking on a week, you had a couple weeks in a row. Look at this, team. Look at all these in a row. That's what, 1, 2, 3, 4, 5, you can maybe count 6, 7 weeks of buying in a row. Not too shabby. So setting up something like this on Bitcoin, I think would be fine. It did kind of break past this level. We'll see if it holds. Maybe they do something like that. Tons of selling volume coming in here, which kind of suggests a temporary top for a while. It does end up breaking that and holding, I don't know, a couple months later. So yeah, I would buy down here. I would open orders down here on Bitcoin around the 45,000, 42,000 level. Next up, I would not touch this. Whoever asked that, INVZ and NCLH. Yeah, I would not touch that either. I mean, what in the world? This is what it looks like. It fell off a cliff and there's a waterfall and boom, and it's made a little bit of movement, but I would not touch this one for the time being either. If you're looking on a bigger time frame, it does not look like a strong stock. If you want to buy some in your long-term account and hold it, fine. During the COVID lows, it was down here around 8 and it's up to 26. So that's not a bad little gain, but you would have had to get lucky. I mean, it looked like death back. It looked like death back then. Crazy selling volume on that, which kind of suggests there might be more following. So more selling come, but that was a year and a half ago. So yeah, that's Norwegian. All right, let's see. We're running out of time. We're out of time already. Tell you what, folks, I'm going to show you some things next when I'm on the mic next Wednesday. I just ran out of time. I apologize. Go ahead and hit me with your stocks. What would you like to see for Merchant Monday when Dr. Falco reviews our afternoon room trades? Merchant Monday. All right, let's get a list started. So we're going to do SPY, of course. We're going to do QQQ. We're going to do IWM and DIA. And then we're going to do Apple. Yes, sir. DATS. AA. I spelled these right. Apple, DATS, Expedia. XPI. Yes, I'm interested in that myself. Roblox. RKLD, Tesla, Plug, Visa, Hood, Robinhood, and Traeger. Roblox on the list already. Tony, I've got it. Square, Unity, Starbucks. Inga, how are you? Cost, got it. All right, anything else, team? PAGS and Zim, got it. PAGS and Zim. All right, cool. Well, thanks for hanging out with me, guys. Thanks. I'll have some fun at Disney. Don't forget to love life, live life, and trade it. Thank you, and good night.